Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, and each and every week we bring on experts, individuals to help us actually work on our companies. In fact, offering quality accounting services and most importantly, getting paid what we're worth. It's here in these shows that we actually have the experts come on to address various topics that range from marketing, selling, pricing, tech stacks, training our staff, onboarding clients, retaining clients, mental health, and so much more. Today is going to be an excellent conversation as it relates to advisory services. My guest happens to be Kevin Appleby. He is a chartered accountant with 20 years of management consulting. He has clients within the finance transformation, cost reduction, and performance management space. Kevin is currently the COO, mentor, and podcast host of Grow CFO. With his extensive experience and expertise, Kevin is a valuable asset to any organization looking to improve their financial performance. So Kevin, welcome to the show.
Roger, thank you for having me on the show. I'm thoroughly looking forward to this conversation.
You're welcome. This is going to be something I've been looking forward to, especially as a fellow host of a podcast, and especially in the context of the show that you share and likewise discuss advisory type services, CFO related work. So first of all, I want to get a little bit of a backstory though. I'm interested for my listeners to understand how you got into accounting to begin with. So 20 years ago, chartered accountant, tell me about this.
It's more than 20 years ago. It's more like 40 years ago.
We're aging ourselves now.
We're aging ourselves here. Yeah. Whenever I do regularly in Grow CFO, we do new member welcome sessions. And I always have to introduce myself. And I always start with, I originally qualified as a chartered accountant more years ago than I care to remember.
Well, that's one of those things where we get so old that it's hard to remember. So tell me what you can about why you became a chartered accountant. What drew you to the accounting?
I kind of remember my father was also a chartered accountant. He ran his own accounting practice, tax, audit, compiling accounts, submitting the relevant authorities, dealing largely with small clients. I didn't get into it largely because of what my dad was doing. I remember being off school, ill one day, and being rather bored. And I picked up a copy of the magazine that he got from the Institute of Chartered Accountants in England and Wales, which at that time had a load of jobs advertised in the back of it. And I got rather interested in looking down this list of jobs and seeing the sorts of things that were available, all very different to what my dad was doing. And most of them were overseas postings, interesting things to be in, working offshore in, say, Bermuda or the Bahamas or places like that. And I started thinking, perhaps there's something in this. And kind of the train started at that point because I ended up doing economics at school. And the latter part of it, moved on to university, did an economics and accounting degree, and continued on the conveyor belt, joined BDO, and qualified as a chartered accountant. And the day after I qualified as a chartered accountant, I left BDO.
Oh my heavens.
Decided this doing other people's accounts isn't for me. I want to be still in finance, but in industry. And I joined what at the time was the number one company in the FTSE 100. There's ICI, Imperial Chemical Industries, doesn't exist anymore.
All right.
But I actually joined their internal audit team. Started seeing a lot about how ICI worked. Eventually became the business accountant of one of their business units. I was in charge of the finances of the European plastics business. We made PET and polypropylene and produced lots of things from it. And business that I was in ended up being sold. Joined another chemical company as a result with the business, BASF, and ended up doing sort of post-integration alignment of our two businesses. Then they bought another business from Zeneca, which used to be part of ICI. So essentially it was the same situation. That business had exited, joined BASF with no systems, and it needed to be integrated into its new owners. So I got sent off to sort that one out. Very quickly realized that what I'd become by accident was a management consultant. So seeing as most of the financial management of the business that I was originally with had gone back to BASF headquarters in Germany on day one, I was kind of left after integrating the second business as a finance manager with no portfolio.
Yeah.
So I moved on and I joined PwC as a management consultant and got involved in probably at the time one of the biggest ever accounting implementations. We were charged with the implementing resource accounting as opposed to cash accounting in the UK Ministry of Defence.
Oh, wow.
So got straight into that whole area of financial transformation, changing processes, implementing systems, which led on to exercises in producing balanced scorecards, cost reductions. I tended to be the finance guy on a general purpose project or leading a specifically finance project, depending on what the client wanted doing at that given time. So never really planned that career. It kind of happened by accident.
So then what got you into a position where you started then podcasting?
I had an interest in internet business. And I joined something called Internet Business Mastery back in the day. This is probably 2009, 2010. And the two guys that ran Internet Business Marketing, Jason and Jeremy, ran one of the biggest podcasts at the time on the internet. And following them, thought podcasting sounds interesting. Met this chap called Graham Arrowsmith while in there. Graham had also joined Internet Business Mastery because we were both based in the UK, not that far from each other. We kind of got talking, struck up a friendship, and we sort of said, wouldn't it be a good idea if we just started a podcast sometime? Yeah, you can talk about marketing, Graham. I can talk about finance. It's an interesting blend. And we got this idea of the next 100 days, which is what that first podcast was called. It's still running today, 9 years later. And we just talk about really to the target audience is folks that have probably left big corporate, set their own business up, suddenly found there's a whole load of things that they need to do that they never had a first clue about, never needed to do in big corporate. So we kind of work around this idea that if this is your problem, here's what you might be able to do with it in the next 100 days. And it gives us an excuse to bring on guests from all sorts of places. And we've met some really interesting people and made some really good friendships as a result.
Oh, of course. I can agree with that statement. So let's talk about growth CFO. Obviously, that space is something that's near and dear to my heart, and it's something that my listeners appreciate. From the accounting perspective, and as a chartered accountant, you would definitely appreciate this. We find ourselves definitely moving from the historical compliance type work as it relates to bookkeeping, accounting, and tax to now more and more getting involved in CFO and advisory type services. And as we work with our clients, one of the things that I find fascinating is, first of all, the definition someone might give to the role of a CFO or advisor. When you hear the term CFO or advisor, and especially as it's being used today, what does that mean? What does that service imply? What does that actually suggest as we're working with our clients?
Gosh, it can mean many things, I think, Roger. In Grow CFO, we work with CFOs and we work with folk that want to become CFOs, help them on the journey to get there, help skill the CFO into doing what he or she might need to do. And we've got something called the CFO competency framework that we help people look at their skills, look at what they're good at, what they're not so good at. But according to what they're good at, what they want to do, they will need support. So the advisory piece comes in into possibly filling in some of the gaps that are around. And it's typical on a CFO's journey in a fast-growing company that you might get into the world of fundraising. We find that a lot of people that join Grow CFO, one of the key things that they're missing is any fundraising experience.
Okay.
Now, they can either get that themselves or they can go ask for an advisor to help them and do the stuff that they're either not skilled at or not done before, or help them along. And the traditional services are still there. They still need tax advice. They still need help to put together the statutory accounts and report. But that's becoming very much more commodity things these days. In Grow CFO, we provide coaching, we provide mentoring. And I think that's a great service that a CFO will always be looking for.
Well, I'm going to jump in here and I'm going to give you a definition of what I describe CFO services to represent, what the CFO is. And obviously, I'm saying this from the perspective of a business owner as they're running their company. They may not know the accounting profession. And so it may be difficult for them to articulate as an accountant would what a CFO is. So here's my attempt at this. I first and foremost believe that the CFO is responsible for the cash flow of the business. And that ties very well into when you were talking about fundraising. So they're interacting with the banks, the lending institutions, the venture capitalists, any place that the capital is coming from. They're involved with basically not only in accounting for it, but also reporting back regarding it. And then as it relates to cash flow, they're also involved with the business operations of the business, coming up with the different policies and procedures as it relates to payables, receivables, so that we can actually meet the financial obligations of the company. And so there may be decisions as it relates to cash flow, where the money's coming from, customer relations, and so forth, that impact, obviously, payables, receivables, payrolls, and the like. So when you're working with a business owner in a CFO capacity, you're clearly affecting business, let's say, structure, what's going on with the cash flow of the business and the capital that's needed to run the business. Would you add anything to that?
Yeah, I would. We actually talk about three different types of CFO.
Okay.
Okay. We talk about the operational CFO, who would be doing typically all the things you've just described,
Uh-huh.
may well, in addition to that, be picking up other things in the business to run. You know? Many small businesses, there's no equivalent CHRO or CIO. So we quite often find that the CFO is in charge of the people, mainly because the CFO runs payroll. CFO ends up being in charge of the IT, might be in charge of the legal team. So there are all sorts of things that the CFO potentially gets into, particularly the operational CFO, and is probably looking across operations in the whole business, looking to say, what can I make more efficient? What can I bring together? What can I streamline? Second type of CFO we describe as the transformational CFO.
Okay.
Right in the middle of the business change agenda, really driving change, driving growth. Quite often his key or their key role will be partner to the CEO, working in the center of strategy, helping the CEO develop business strategy, drive business strategy forward. Third type of CFO is the financier, or even sometimes we call it the Wall Street CFO.
Okay.
Very much into mergers, acquisitions,
Yeah.
fundraisers. And we're finding increasingly there's a blend of CFO coming along that probably hasn't got a CPA background. They may well have a commercial banking background. Completely different set of skills being brought in.
Completely agree.
Yeah. So I don't think there's necessarily one CFO definition. It could be a blend of all three. It could be more towards any one of the three.
Well, I agree with you. I like the three that you've just described. Clearly, I started with the cash flow. I'll even go back to you. You began with the fundraising, the capital. I mentioned cash flow, but your first point of the chief human resource officer stepping into that role, you're right. The business, when you have a CFO, chief financial officer, they're going to be involved with things outside of the
Yeah.
finance. They're going to
Yeah.
be at the seat of the table where they're going to be having these types of conversations and they're going to have input as to these various elements of the business. And as it relates to HR, compensation is a big part of the business, and it's oftentimes the biggest expense in the business, the payroll side. And so to figure out how to equitably pay for someone's services, whether someone's salary, whether someone's got some a pathway to equity, whether or not someone's being commissioned, whether or not someone is being bonused accordingly, the CFO can be very influential in saying whether or not that's a profitable compensation package for that employee as it relates to the success of the business. Because too often you could actually run into a cash flow situation where you're compensating someone before the cash is coming in from a particular transaction, and you're rewarding maybe a sale for a salesperson, before you've actually realized the gain for that. And so that's something that I think the CFO can definitely help the business owner navigating as they're running the business. And then you were mentioning IT. Clearly, there's a lot of information going on within the organization as it relates to the IT side of things. And so you're integral to the success of the business as it relates to what the information is that's coming in and flowing through the business. But your last thing, I think there is a very big part of when a company is choosing to go public and it's now in a position where it's needing to get its finances in order so that it can now be public. That's a very distinct role that's going to involve the CFO. That wouldn't be the case if they were not going public. So I liked how you brought those different roles in because they each have their place within certain businesses.
Yeah, they definitely do. And I think if you're looking at this from being the advisor to the CFO, I think you've got to look at the skills and talents and the needs that CFO has got, and it's going to be different from place to place. And one area that is probably the biggest challenge for CFOs right now is
Okay.
the change in systems. You know, automating accounting systems, integrating accounting systems with the
Hmm.
rest of the business. Um, some CFOs are good at that. They've got people in their team that can help with it. Others don't know where to start. There's a big opportunity in that kind of area, depending which CFO you've got to come along and give some external support.
Well, one thing that I can share just because of personal experience, you're right. As the CFO is involved with any systems that are being either considered or implemented in the business, there are financial ramifications to not only choosing that, but contractually agreeing to that service, implementing it, rolling it out. That whole experience has a financial cost on the business. And depending on the size of your companies, we could be talking not only about hundreds of thousands, but millions of dollars being spent on certain software applications, certain platforms that you're using. And all of a sudden, the CFO, their ability to help articulate what this all means from a financial point of view is hugely important, not only with the decision to move forward, but then watching it as it rolls out to see that it stays within expected norms. So, yeah, I see the value of that role. Let me switch gears on you now regarding CFO. You've brought up the term advisor quite a bit. How does an advisor differ from a CFO?
An advisor would normally be somebody, I think, who would have a huge depth of talent in a specific area, who would be brought in for a short period of time to help solve a particular problem.
Interesting. I'm glad we're having this part of the conversation because in this space, I find that there are some synonyms that are used. And I wonder whether or not in the accounting space, we do a disservice to our clients when we use these synonyms. So you've just defined advisor. How does an advisor differ from a mentor, from a consultant, from a business coach, let's say? Do you have any distinguishing uh, definitions for either of those roles?
Um, there's a lot of overlap between them, but
Hmm.
let's have a go at it. Um, I've been a management consultant for many years, probably the last 20 years. And I think what would make a management consultant different from an advisor is the implementation part of a project.
Okay.
You may well, as a management consultant, come in, look at a problem, work on what's the solution, advise the client on a way forward, and then step away. But you also may, as a management consultant, then say, and you need help to implement this. And you're then working with the client all the way through the process
Hmm.
of design, build, and implement the new solution. So I'd say that's probably the key difference. There are some firms that simply operate in the advisory space, some that just operate in that consulting space, some that have an overlap between the two. But coaching and mentoring is, I think, a very different thing. Certainly, the way that works in Grow CFO is a lot of CFOs tell us that having that top job's a lonely place.
Mm-hmm.
They need a sounding board. And coaching across the C-suite these days is fairly commonplace. But we say, hang on a minute, the CFO has a very specific job to do, a set of skills that you're not going to find in any other member of the C-suite.
Mm-hmm.
You can't just have any coach to help that person. So we look at mentors that have been CFOs themselves, in some cases still are CFOs, and they've kind of been there, done that, got the t-shirt,
Mm-hmm.
and they can help advise. It's advise is kind of more, go research, find out what's wrong, come up with some solutions, write a report, here's what you've got to do. Mentor is more talk it through, work out together what the options are in a much more one-on-one way. Look at and actually, I recorded a podcast a couple of days ago with our head of mentoring in Grow CFO, and we were talking about how mentoring was as much about a holistic approach of solving the personal side of the problem as opposed to just the business side.
Interesting.
Fine, you can come along and say, oh, well, you've got this business problem. Okay, you can do that, that, and that. But quite often there's something about the personality of the CFO or the imposter syndromes that that person's got, lack
Yeah.
of confidences that are stopping them doing something that they should be. The role of the mentor is as much to break through those sorts of things as it is to give the advice.
I like that. That was very insightful. I'm going to share with you my definition of the four. I'm a little bit more particular about them, and I'll admit right off the start that these are synonyms in the sense that I find that many people use them interchangeably. But for me, they're very distinct. So here's how I'm going to go. Mentor for me, like you were mentioning, can get a little bit more into the personal side, but it's an unofficial, non-compensated relationship, and it's typically interacting with people in associations, organizations where you're being mentored, simply being exposed and interact to somebody that is further along in their career or experience, and you're just through casual interactions gleaning wealths of information as you interact with this individual. So it's nothing contractual, it's nothing monetary, but it is a relationship that over time, you just through experience get to glean from that experience. The second would be that of a consultant. That would be someone that is paid to do a project. They have a certain skill set, experience that can come in, address a particular need, be paid accordingly. It's a one and done type project in the sense that there is an end date. The advisor is a little different than the consultant in the sense that they come in with an expertise, they advise, they give insights, perspective, but they're indifferent to the implementation, where the consultant is paid to do something specific. The advisor is educating, but they're not there to see it rolled out or implemented because that's the decision of the C-suite as to whether or not it will actually be acted upon. So they are very helpful, very informative, have great bits of information, but they're not there to see the implementation through. And that's where the difference between an advisor and a coach comes in. The coach, they're not a consultant in the sense they're not doing the work, and they're not an advisor in the sense that they're just teaching it. They're going to see through the implementation as it is from the business owner's point of view, what's important. So they may advise, but they're now going to stick it through with the client, figuring out what does the business owner want to implement, what is the priority of the C-suite to actually say what is next. And they're not doing any of the work, but they are asking the right questions, asking for timelines, holding them accountable as to what's expected. And as a coach, typically through the questioning and the accountability, they're able to accelerate the implementation and success of the different things being worked on. So mentoring, not the same as coaching, consulting, not the same as advisory, but similarly, they are used as interchangeable terms. Would you add anything to that?
Yeah, there's an interesting one that in consulting we often talked about,
Mm-hmm.
that as a small firm of consultants, we often stepped into part of what you've just described as the coaching space,
Mm-hmm.
but we'd call it client-side advisor. Yes, we were there in the implementation of a big project,
Mm-hmm.
but we were very much, there would be maybe one or two of us that were definitely holding the implementer accountable and advising the client how to manage the implementer. You might get a big systems house like an IBM coming in
Uh-huh.
doing a project, but you as client-side advisor would be helping the CFO and the rest of the C-suite manage the implementer and keeping them accountable and honest and so on.
Yeah.
Whereas a coach, I think of as a much more one-on-one personal relationship.
Interesting. Okay. Well, I'm glad we had that part of the conversation simply because I think these terms are interchangeable in many people's vocabulary. And I think as an accounting profession, we're doing a disservice when we use them so liberally. We
Mm.
need to actually be more intentional about our use of these terms because then I think we're able to better articulate what it is the customer's paying for and what they can expect out of the relationship. If I'm paying for a consultant, I expect them to get something done. If I'm paying for advisor, I'm looking for great advice. If I'm paying a coach, I'm hoping that I'll be able to, with their help, implement and see things that I'm not seeing, but at the end of the day, see change. So those things I think are very important as they relate to the accounting profession. And the better we can do while we're working with our clients, explaining those roles, I think the better expectations they'll have of us as it relates to what they're paying for. So that's good. Let me dive into a few things here as it relates to CFO services, and I'd like to kind of get your take on this. Clearly, in the financial space, we're doing planning and analysis. What would you say as it relates to the CFO and the advisor as to what should we be doing as it relates to planning and advising?
I think you've got to look at the whole that you might see in many small businesses. Okay? They may well have a finance team that are doing the bookkeeping.
Mm-hmm.
They're great at processing invoices, great at processing the cash. They can put reports out about that. But a skill set that we often find is missing, and we're seeing actually quite a few fractional people coming along and providing a
Yeah.
service across a number of businesses,
Yes.
would be in the FP&A space, coming in and providing that extra data analysis piece that kind of reveals things in the data. They help with a forecast into the future, budgets into the future, you know, playing with the numbers and getting some management sense and some insight out of the numbers as opposed to just doing the transactional accounting.
I liked how you brought that up because that leads me to my next question, which is where do you see the accounting space going as a profession in the coming years? What change do you see on the horizon that we as accounting professionals need to be ready to embrace?
To be honest, it's nearly all in that area. You know, we've seen over the last 10 years the things that we used to spend a lot of time doing being automated.
Mm-hmm.
You know, we've got accounting systems even at the bottom end for small businesses, Xero, QuickBooks. You put your transactions in. In fact, you press a button, it pulls the bank feed in. It does the bank reconciliation automatically.
Mm-hmm.
Now, all the things that we used to spend hours and hours doing as accountants happen pretty much automatically.
Yes.
There's going to be even more integration of systems. Finance transformation, as I said earlier, is one of the big things that's going to be happening. AI on the back of that is going to make a huge difference. And we're going to find that virtually none of those traditional things that we've done, either as accountants in public practice or accountants working in the business, have done in the past. And nearly everything that we do, I believe, is going to go towards the human side of understanding the numbers, telling the rest of the business the story behind the numbers, putting the choices that are implied by the numbers in front of the rest of the business, and helping bring the business along to the right decisions as point of that. Now, there's a whole load of skills in there, Roger, that you were never ever taught to pass your CPA exams.
So that brings me to want to know what advice would you give the accounting professional who is doing the compliance work, is comfortable with the bookkeeping and accounting and tax perhaps, but sees the need and opportunity to get into the advisory space and recognizes their clients need that fractional CFO advisor helping them in their business, and that this is clearly a service that they could and should be offering? What advice would you give them?
I'd say you've got to start showing the client where the gaps are in their information. Okay, if you go along to say to most CEOs or even the accountant within the small business, oh, you need FP&A, they would give you a blank stare. Okay, and they'll never buy that concept of having FP&A. They will buy the concept of having some interesting reports that tell them good things about their business that'll give them some insight. So I would say the way to get into this as a as an advisor that's been doing all that compliance work in the past is to think about the data that you've got at the moment from your client. What can you do with that data that might just produce one or two different pieces of analysis? Now, could you start with, say, some revenue segmentation? Well, most accounting systems will have one account called sales.
Uh-huh.
Tells you nothing.
That's right.
But if you can then go down the route of saying, well, actually, we can segment your sales into these different areas, and that might be by product, it might be by geography. There are loads of different ways you can potentially segment revenue. But then where you start putting insight onto that is when you can start looking at the cost base of the company and starting to say, well, what does that particular service or that particular segment actually cost you? You can start seeing a margin on that business, not necessarily gross margin in the way we define it as accountants that says, revenue less cost of sales equals gross margin. You've got to go below that and say, well, virtually any cost in a business you can allocate in some way to a product, because the things that we sell to customers drives everything that we do.
So what you're describing here is we need to go and not only answer the therefore what question, but we need to do a better job of now analyzing the information and seeing how it is relevant to the business owner as they're running their business.
Yeah, yeah.
Very good.
And I teach that sort of thing as activity-based costing
Mm-hmm.
in the classroom. And I use a lovely example that the company's only got two products. There's product A, which is a fairly cheap product. It's got a fairly low margin, and they sell quite a lot of it. They've introduced product 2, which is a much more expensive product. It's got a great big margin, and they're encouraging the sales force to go out and sell more and more of it. But the board are now sitting there and scratching their heads because the more they seem to sell of this fancy new product 2, the less profit they make. And it's because they've got the allocation of costs in the company completely wrong. And what looks at first sight a fantastic gross margin actually is driving so many more overhead costs in the business. Now, this whizzy product isn't always being easy to use for the customer. So there's a lot of customer service costs. The phone rings on the help desk. It rings once for the good old, nice, easy product. It rings 10 times for the new product. Suddenly we've employed 3 more people on the help desk. Nobody's realized that all of those costs should be allocated across this new product. And going down into the detail like that, you can add so much more insight. It's not just one P&L account. Sales, cost of sales, overhead costs gives you profit. Think about all the way down. How can you segment that? And that sort of analysis then starts giving you some insight into the business. And you can say, okay, we've got 3 or 4 products here. This one's high growth, high margin. Yeah, keep doing that. This one's high growth, medium margin. Can we do something to make the margin a bit better? Maybe, maybe not, but keep going. Oh, hang on, this one, it stopped growing. This one, oh, look, it has stopped growing and it looks as though it might have a negative margin. So you get to the place where you can really start advising your client on a stop, start, continue decision. No, here's stuff we should stop doing. Here's stuff we should continue to do. But oh, look, don't you realize there's a segment out here that you never really touched? There's a potential, because it's a segment that's right near you, what you're doing already, that you could move into this. There's a great growth opportunity. Look, it looks as though it could be profitable. That sort of advice is really what I think is front and center in the FP&A space.
I love that you brought that up, because I've had this conversation with some clients, and what it is the business actually started offering a particular product that years later was no longer part of their good revenue. And what I mean by that is, if you do the analysis like you just described, you would see that the business is actually losing money holding on to this original product that they thought that they were known for and that they offered simply because this is what they did from the very beginning, but no longer was it a profitable product. And so for us to point out that this was something that they maybe either need to consider stop doing, which for them was, kind of the legacy of what they started, or they needed to change how it's now being offered because it was no longer profitable. This was a learning moment for them, because they were very attached to this particular product line, but yet it wasn't what was making the company money any longer. So at some point, it was that hard decision of, do we discontinue this and move away from it because it no longer is what we are making money from, or do we change it up so that it can still be a profitable venture? But it's only because of the analysis like you're describing that led to that conclusion, because the business was masking how this was a loss for the business. Does that make sense?
Oh, it makes total sense. And Roger, there's another dimension to put on top of that. The business gets emotionally attached to some of these projects.
Exactly.
They might have a gut feeling that they're doing the wrong thing, but they're wedded to it. Sometimes they've got to hear from an outside party that is a little bit more detached the truth. And I think that's where the external advisor can come in and have great impact by telling it as it should be. Now, there's another element to that the external advisor should be doing. Once you've made the stop decision, are you taking out all of the costs associated with that product that you've just got rid of? Now, there's a good old-fashioned law, Parkinsons Law, that says work expands to fill the resources available to do it.
That's right.
Okay. Now, if you've costed this properly and looked at the activities behind the product or the service, now you should be able to spot the amount of people's time that is currently taken up with that product you don't want to have anymore. And you should therefore be going through a process systematically of reassigning all of that resource or getting rid of that resource once you stop the product. Now, problem one is spotting that you shouldn't be doing it. Problem two is fully getting out of it.
I have to agree. There's some things that just are this is how we've always done business, and you cannot attribute why it's still the case. Well, it happens to be a product line, a thing that we were doing years ago that we just fully haven't separated from or gotten rid of within the organization. So yeah, there are just some traditional things, legacy things that kind of exist in businesses for no other reason than this is how we used to do it. So I have to agree with you on that. Well, Kevin, this has been a great conversation. I think this is one of the things that I was looking for, was just basically a dive into how the CFO space works and what we can expect as accounting professionals in that realm. So here's what I'm going to do. I'm going to kind of summarize a little bit of what we've been discussing and then come back to you for a closing thought. But as my summary, or before my summary, I'd like to actually extend an offer to the listeners. Kevin's been very kind to offer the opportunity to join or participate with Grow CFO. You can go to the episode description and there find information on what it is you can gain access to and benefit from this offer. So definitely go to the episode description and find out more what it is that you can do to join Grow CFO and learn more about what it is you can be offering your clients in this capacity. In addition to this, I want to invite you to get a book called In the Black. It's 9 Principles to Make Your Business Profitable. It is specifically those 9 things that enable us to work with our clients with intention to help them in a CFO capacity to address those things that they need to be doing to be a profitable business. And likewise, get a copy of Your Profit and Growth Expert. Your Profit and Growth Expert addresses specifically what it is that you should be doing in a CFO and an advisory role, how you can be servicing your clients intentionally in that capacity and doing so effectively. Now, with that being said, as a summary, I do want to point out that I was excited for this call because I knew that with Kevin's background and experience, we would actually find that there are a lot of opportunities as it relates to CFO. I liked how we started by describing the different types of CFO-related services, ranging from the funding and the capital that's going on in the business to the cash flow and then the business operations, but also how it related to then the HR-related type tasks, the IT-related type tasks that sometimes fall into the lap of the CFO. But then the other thing that was very helpful was this idea of what are we doing to actually help businesses as they may be involved with mergers and acquisitions or going public. These are each things that at the executive level, the CFO is going to be involved in as they have a seat at the table. And these are things that as accounting professionals, we need to be prepared to address as we service our clients if and when we're put into that fractional CFO opportunity or that advisory space. These are the types of decisions that are happening at that level. And I thought that was a very important part of the conversation. The other thing that I thought was helpful was the amount of information technology that goes on in business and how it impacts the CFO, particularly because of the information that we're watching and tracking and being aware of, but also the costs associated with the implementation of these various things in the business. Those are some of the things that I think are very appropriate for the CFO to consider and be involved in. The other thing that I thought was helpful is we were addressing how this is evolving or changing. Kevin was very articulate in explaining how our roles have changed to where we're no longer doing our time, spending our time in the compliance work, but rather more in this advisory space where we're looking at the information and answering the questions of therefore what, and how does this actually affect the client moving forward. Those are some insightful things that we need to consider as we're working with our clients and realizing it's less what's happened, but more important, what's on the horizon that we need to be preparing for. And as it relates to the CFO space, it definitely is the cash flow of the business. Do we have the funds needed to meet the obligations that we're forecasting? So with all that being said, Kevin, what is the final thought you'd like to share with our listeners?
The final thought, I think the biggest skill that you can acquire to really help you, we talked about potentially analyzing numbers, splitting things down, looking at what's profitable, what's not profitable. To really make that work with your client, the skill that you need is storytelling. Learn how to tell the story and make that message come alive with your client.
Very well said. Storytelling does make it more relatable, understandable, and it's something that's easier to listen to. So very, very good. So with that being said, I appreciate you, Kevin, coming on the show and sharing your insights. For my listeners, I want to invite you to, if you haven't yet, subscribe to the podcast. Each and every week we have on experts that you'll want to actually hear and listen to, various things that we address, topics ranging from marketing, selling, pricing, client onboarding, client relations, tech stack, staff training, mental health, a variety of things that you need to be aware of as you're running your business to, in fact, build the premier accounting firm, offer quality accounting services, and getting paid what you're worth. So like and subscribe to the podcast now. In addition to that, I want to invite you to go to universalaccounting.com and find in the navigation podcast highlights. These are playlists that we've put together, allowing you to go back and binge listen to the experts as it relates to topical needs that you have in your business today. Hear what they have to say and apply those principles in your business now. In addition to that, I want to invite you to GrowCon. GrowCon is an annual conference that we do each and every May. It is a conference for the owners of bookkeeping, accounting, and tax businesses to come and hear from the stage what the experts have to say as it relates to running our businesses. In addition, you get to come meet your peers, those other people that you can collaborate that are doing exactly like you are around the world. And in doing so, find out what's working. And by doing so, collaborate and perhaps even take care of your clients better. Lastly, you also have the opportunity to meet the staff at Universal Accounting, those individuals that are committed to helping you be in business for yourself, but not by yourself with Universal Accounting Center. So definitely get your ticket now. Join us for GrowCon. In 2024, we're going to be in Jacksonville, Florida. We're excited to be with everyone. It's always a fun affair, and it is May 6th and 7th. After that, we're going to be announcing very soon where we're going to be in 2025. Each and every year, May, join us for GrowCon. In addition to this, if you'd like these principles and others that we've been discussing, feel free to reach out to us at universalaccountingschool.com or give us a phone call at 801-265-3777. And always remember this, if it's about accounting, it is universal. Take care, have a great day, and be safe out there.